like everything else.
Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 28th, 2022. We are recording this at 1 p.m. Eastern time, and this is episode number 368. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. And today I've arranged for Dan Passarelli and Anka Metcalf to join us for today's guests. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. We walked into a very active Monday morning, so a lot to talk about here. So we're going to get to it as soon as possible. But right away, we're going to introduce ourselves so everybody knows who's speaking. Start out with Dan. Dan, a little background on yourself and what's going on at your company.
Yeah, sure. Thanks. So my name's Dan Passarelli. I've been in options for, like 26 years, something like that. Started down the floor, trading floor, worked my way up from runner to become one of the biggest traders in my pit. And let's see, about 15 years ago, started Market Taker Mentoring, which is a leader in option trader education. And we've been working on lots and lots of really great stuff in order to find great spreads like credit spreads and time spreads, and even some, short squeeze action and lots of other stuff. And so maybe we'll have an opportunity to talk about some that popped up on our screeners during this conversation.
That'll be great. We'll definitely get to that as well. Anka, a lot of people already know you because you've been doing these things for a while. But for people who are not aware, a little background on yourself, Anka, and what's going on at your company.
Of course. Thank you so much, Jim. And thank you so much for having me. I guess I'm having a little bit of an echo here, so please bear with me. I'm having the charts on one screen and actually the sound on a different screen. So I have to turn down the sound on the other computer in order not to have the echo. But anyways, so thank you so much for having me, and thank you everybody for coming and joining us today. And I hope you guys had a wonderful Thanksgiving. My name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com. I have been a professional independent trader for more than 20 years, and prior to becoming a professional independent trader, I come with 10 plus years in investment banking. Like I said, we do focus on trading futures and equities. I day trade futures for the first 2 hours in the morning. And I swing trade and actively invest in the equities markets. I also run a swing trading service for stocks since 2010 actually, and a trading room focused on 2 hours or less since 2016. And we do provide trading education for stocks and for futures, as well as, swing trading, day trading, and investing. I like to specialize in high velocity moves. That means that you're getting the maximum volume into the market and you're getting power pushes on either side of the tape. So that's pretty much it in a nutshell.
Hey, Anka, a quick question on the 2 hour trading situation. Is that picked out because it's a more convenient time for most traders, or do you find that to be the most advantageous part of the day, or what do you think?
I trade with the open. I trade the open because that is when the power, usually the power push is coming in and you're getting the institutional participation. You're getting a lot of participation from triggers that are coming in from the New York trading session and also from the start of the algos. And I typically benefit from the first hour and a half in trading. That is where basically the most volume is into the market. And then again, if, for example, this is how I trade, but also a really great way to trade is the first hour and the last hour, because that is when you're having pretty much equivalent volume into the market.
Yeah. I figured the beginning of the days where there are a lot of volatility hits, a lot of volume hits, ergo, a lot of opportunity to be had, particularly if you're only going to be in there for one day. You obviously want to be in there when the action is most probable, right?
Yes.
I got you. I'm with you. I thought it might be because everybody wants to play golf after 10 o'clock. And so
that too, or go to the beach.
I thought that was it. Okay. Let's start out with our Monday morning quarterback. Actually, it's the opposite of Monday morning quarterback. This is a Monday question of the day. We opened today on the S&P E-mini. I'm going to look at about 39.95. So from 39.95, where do we think the market will close on Friday? Of course, we got Jobs Friday coming up, so not an easy question. But where do we up, down, or sideways from 39.95? Dan, what's your call?
Well, we're looking at the 200-day moving average, which, of course, is this really, really strong pivot level, and that's going to act to hold things down. Where there's talk about interest rates not being raised as much, but they're still being raised, right? The Federal Reserve is pricing in the CME is pricing in a 67.5% chance of a 50-point hike next time, 32.5% chance of a 75-point. So I'm going to call for a little lower by Friday. We're looking for an exact number here, Prof.
Nope, just a ballpark. So from 30, and of course you got a head start at 14 points, so that's not bad, huh?
Yeah, exactly. Right.
It's always nice to get a lead. If you can get a lead, keep the lead, right?
Yeah, I think something to the tune of maybe 390 or something. I'm not looking for a big drastic move down.
No.
And I wouldn't be surprised if we get a couple up days this week too, but I'm looking at lower on Friday.
Choppy to lower, yeah. Okay, and what's your probability on that? 60-40, 52 to 50, or a little bit higher, or what do you think?
Yeah, I mean, there's a lot of scrutiny and everything everybody's saying these days. People are looking for a reason to sell off. I'd put it at a good 65 delta.
65 delta. Okay, Anka, what's your crystal ball talking about?
Well, I'm not liking the 200 simple moving average, just like Dan mentioned above. That's a huge road bump for price. And I think it's just a little bit too much right now, especially on low volume for the price to go up. I'm looking at a pullback most likely to the 20 SMA, probably into the 3,900, 3,950 to 3,900. However, I still use another moving average. I use the 10 exponential moving average. And I have to say that if you're looking at the daily chart, if you add that 10 EMA right there, the price has been trading above the 10 EMA since the beginning of November. So we have that as a power trend indication. So as long as the price action is defending the 39.80 area, I think that, there's still a great chance for a bounce, because if you're looking throughout the chart, there was a bounce on the 17th. Here it is. Yeah, thank you. So we had that prior pivot bounce right off that 10 EMA. So the price action is really trying to break out a little bit here. So you probably want a percentage from me, right?
Yeah, of course we do. Of course we do.
Well, it's really hard to, kind of like, predict this kind of action, but I would have to go towards a mild pullback, going into the 39.50, probably into 39 by the end of the week.
Yeah, so just a moderate little bit of volatility, because we're in the holiday season and all that stuff too, right?
Right. I'm not really a big fan of low volume and high volatility, because that's where the whip is happening.
Right. Okay, Dan, I got a VIX thing for you here before we get into anything else. My feeling on the VIX is where we're down at 20, which was the high point on the market in January, February, April, and August. And after we hit that 20 area, we definitely got substantial drops every single time. But my feeling is the VIX is either telling us one of two things. Either we're going to get a repeat of those things I just mentioned, or big money is comfortable putting money in the market when the VIX is in this area, because obviously they don't want to put it in the market when the VIX is at 35. So if large money is more comfortable here, will that offset the fact that we historically have gone in the tank after this kind of thing? What's your feeling on the VIX at 20?
I love the VIX being at 20, because it gives a really nice opportunity to pick up some more puts. And thanks for the reminder on that one.
Yeah. And like I say, you have four distinct evidence what happens when the VIX hits 20 this year. So it's not like this is an area where you're just far-fetching saying we could drop. You know what I mean?
Yeah. And, I'm not a huge fan of the tail wagging the dog thing, where the options market leads A lot of people love talking about that, but you do get a little bit of that when the VIX gets down to these levels, because the smart money does step in and buy some cheap puts.
Yeah.
And that means market makers are selling puts and therefore selling stock. And you can get that the supply pressure.
Yeah. The options, as we know, that many people may not understand, is it is priced for what has already happened. That's why they call it implied volatility. So you're going to pay for what has happened. I don't think it's telling you what's going to happen at all. I think what it is telling you is what has happened. And of course, if it's accelerating the implied volatility, of course, that's indicating that the momentum is quite big, but it's not generally telling you that it has to keep going in that direction. It basically tells you you're going to pay for whatever has occurred.
Yeah, volatility data is a lot murkier than a lot of people, let on to. You tend to get an inverse relation between implied volatility and the underlying equity about 80% of the time, typically, at least in the S&P 500. But that means 20% of the time they move in tandem. And it's never a direct relationship. If one's up 1%, the other one could be down 5% or whatever. So there's a lot of muddiness when looking at that. And you really need a very, very cautious eye to extract data from that relationship.
Yeah. If we were going to go up towards the 4,100, 4,200 area and not have a big correction, you would assume that the VIX will blow out 20.
Yeah. I think if we got up to that level in the S&P 500, I think we're gonna end up being below 20, and that's going to become a resistance level in the VIX.
Yeah. So it's very big crunch time here, and it'll be very interesting. Plus, you got the China thing going on. Anyway, let's turn to Anka. And Anka, is there any fundamental, technical, or anything going on out there that's skewing your opinion this week or anytime coming up soon?
Well, we still have some data, fundamental data from earnings that we're still having. So there's still, stocks like Intuit or Big Lots or whatever that is reporting. So we still have a bunch of Chinese stocks that will be reporting again this week. But I think that we should focus more on some numbers that will be released this week. I'm talking about the ADP non-farm employment change that is going to come on Wednesday. Also on Tuesday, I forgot about the CB consumer conference that comes in at 10 o'clock. So we still have a lot of releases. Plus, Powell is going to be speaking on Wednesday. That's going to be a big doozy.
Yeah.
We have the ISM manufacturing PMI on Thursday, I think. And then on Friday, the usual non-farm employment change, unemployment rate, average hourly earnings. So all this data is going to shake and bake the market a little bit. I'm also, kind of like a bit hesitant into jumping into the market aggressively. And I was like this to start off the week. First of all, very low volume. We're not even having half of the volume. Today is actually the equivalent of what we had on Black Friday, the volume in the market. So we're not getting the price, which is true to technicals, true to anything. It's just a whip around. There are some algos that are dancing around, and probably some bored retail traders that are in front of the computers, just like us right now.
Right.
But I think the action is going to come with once we hit the first of the month, December 1st.
Right.
We're still expecting a big balance in the market with the end of the month this week on the 30th. So there are a lot of things that are happening today and through Wednesday. But I think once we're all done with that, all this data is actually going to help us, try to choose a direction into the market. So it's all up to this data. To see where we're going for the week. And like you mentioned earlier, I think China is going to be a really big factor into everything that it will be going on this week. Chinese stocks and whatever is happening there, I think it's going to have a really big impact. I mean, it's been hitting Apple, right?
Yeah.
With the productivity of their plant in
Foxconn,
China. So
yeah.
we'll see if that's going to extend. I mean, you have cities like Beijing, you have Shanghai, you have Wuhan, you have some of the most important cities and, factory hubs, plant hubs that are affected by all this thing that is going on there. So we'll see. So there are a lot of things. We have geopolitical aspect, we have economic aspect that may shake and bake the market a little bit. Plus, we still have a little bit of earnings left.
Yeah. So it'll be quite a bit going on. Plus the dollar looks like it might have done with its correction a little bit, went down about 105 and, it seems to have drifted upward again. So that little advantage the market was having is not continuing. And the 10-year note went down towards 360 and now it's kind of gravitating the other way. So it'll be interesting to see if they can get going here. Dan, anything you're looking at here on a fundamental technical basis?
I gotta tell you, it's like the funniest combination that I was watching this morning as oil and Tesla, they were both going higher. So how ironic was that? So oil was going higher today. I think that, we're revisiting the prior low from end of September right now. And today is going to be pretty decisive on that candle that, probably it's going to, let's see if it's going to close like a hammer candle, but typically it looks like a short squeeze into the $80. And also Tesla running higher as well. So these are the two things that I'm watching right now. So Tesla is very interesting with the candle that it has today and tomorrow. Yeah, if we trade over today's high, we're going to 80, and that's my bias. And Tesla looks higher as well. So these two.
Yeah, if we put up the Tesla chart, it looks like the low from Friday, which it looks like about 166. Looks like it could be the kind of low that you could get another reversion rally, because you can see.
Exactly.
Yeah. And so it's oversold, and you got a nice formation, a low surrounded by higher lows, and you got an RSI divergence down the bottom. So, you got a lower low there, plus the RSI didn't make a lower low. So, you got a shot that it could rally up here. Again, they just struck a deal with Korea, or they're starting to. So it looks like they're, and Indonesia, I think he's over there doing some kind of a deal. So he's definitely out there expanding the footprint around, maybe getting off of the reliance on China a little bit.
That may help Tesla a lot.
And then Tom, Dick, and Harry's got to be short by now. So just getting them to short cover can give you 10 or 15 bucks probably, right? Yeah. All right. Hey, Dan, did you have something else on your radar that you're kind of looking at that you think might be interesting?
Just a lot of the stuff that Anka said, I'm looking at, very similar things. We were talking a little bit though, before we got on about crude, for example.
Yeah.
And if you look at a chart of crude, I don't know if you guys want to throw it up or you want to, And I love that you have RSI on the bottom, because that tells a little bit of the story here.
Yeah.
But if you look at crude, so let's not forget that when it comes to, actual real macroeconomics, which can get really funky some of the time, right now we're in a state where, if there's good news about the markets, well, then what does that mean? That means that interest rates have to stay high, and that's bad for the markets, and that whole thing goes back and forth. But when we're looking at crude, let's not forget that lower crude prices are great for productivity. It's an input cost into stuff that is created, that ends up benefiting the bottom line of companies that use crude, which is basically all of them, right? And we do have, let's see here on this, if we're looking at, this is CFDs on WTI. Yeah, we've got a little bit of a longer term divergence there in RSI. If we go back to, let's see, on the chart that I'm looking at, it looks like about September 26th, actually.
Do you want to share your screen?
Yeah, I guess I can pop it up for a minute and then let you guys take it back.
Okay, you should be able to do that now.
Okay. There we go. Yeah, I mean, if we go back to September 26th here, and I mean, I am just sort of using the normalized crude future here. Maybe I should use something like USO might be a little bit better, and we do get, we'd get a little bit of a different picture with that. Let me go back to crude here. Sorry about that.
But are you thinking this 7350 was kind of like a run the stop? You're a floor guy. Was it kind of like run the stops and now we're going to go back up?
Yeah, I mean, it appears that way because we've got just we hit that low today here, and the relative strength index, gave us a little bit of a turn up and didn't hit below the 30 line like it did back in late September.
Right.
So yeah, I mean, I think we could see that.
Yeah. And 84, 85 might be 80 to 85 would be the region it might jump into.
Yeah, I think we'd be looking at some of the resistance with the 50-day moving average, and
Right.
if the 20-day moving average fails, that we would likely see a bounce back down for a couple bucks anyway.
Yeah. Well, that looks like a good opportunity a little bit, and so does Tesla as far as potential overreactions to the downside, and then a bounce back up. Both of those look interesting from a standpoint of a trading opportunity, huh?
Yeah, absolutely. And, just interesting, you see that RSI divergence right here, and we see that it's following through a little bit. And, we've seen some stuff like that in a couple of different stocks. And it's been interesting.
Mm-hmm. Anka, as far as other sectors, I mean, are you seeing anything emerging in the gold area? Because some of the ratios, longer term ratios like stocks to gold, shows gold as a very undervalued asset to stocks right now. And I'm wondering if there could be an opportunity next year in industrial metals or precious metals.
The reality is that, yeah, we have been sideways since 2020. And again, we have been into a really wide sideways pattern from 1600 basically to a little over, very close to 2100. And the price action has been really choppy, really chaotic. The price action hasn't gone anywhere. So it's just a big giant mess.
Right.
There is some hope. So for example, this month is the very first month actually in more than, almost more than half a year, where the price action proved that it lifted a little bit. So it lifted off of above that $1,600, but it's still out in a gray area. I think that it's still in the core of that massive, let's say, if you're looking at a monthly chart, you could see like the really wide range and the really wide transition. It's a bull, I would say, let's say it's a bull base into the top from the prior top that we've had in when was it, in 2009 or
Yeah.
I'm sorry, I think it was in 2012 or something like that. So the prior high, exactly where you're holding the cursor, right?
Mm-hmm.
And the 2011. So yeah, we're still digesting that prior high. And typically gold, if you're looking at the bottom action that we had from 2013, when the price started to lift a little in 2019, it tends to stabilize for a very long time. So you have to be very patient if you're looking into a longer term gold.
Mm-hmm.
I haven't even liked it for short term, for day trading, let
Right.
alone for swing trading. So I think that, this is something that we're going to have to wait and see, how it trades, before it actually commits. I mean, it's all nice and fun when you're having a downtrend or you're having an uptrend. The reality is that it's still into an uptrend. So, and that base that we're having right now from 2020 till now, it's
Mhm.
still an upper range. So it's into that channeling, into that, let's say, into that third stage, into that third cycle of decision. So it hasn't broken down, but even if it breaks down, for example, to 1400, it's still going to be in an uptrend on monthly.
Yeah.
So
And that would be a fabulous place to start looking at.
I know.
Yeah. 1800, obviously 1800 area is a neighborhood where on a lot of the
Yep.
stuff that I look at, it's a real
Yep.
it's a traffic jam of moving averages. So
Exactly.
above that 1800, it'd be kind of like taking the lid off a little bit.
Yeah, if it bites into that 1800 and stays above, then we may have a chance. And I think it's going to move in small increments. It's going to go like 1850, 1900, 1950, 2000, because it has resistance levels from each $50.
How about a couple of industrial metals? FCX is your copper and X is your steel. Let's look at those two and see if they may have a future, especially if you look at the longer term graphs like we were just looking.
We actually had a trade in FCX, and we exited the trade, but it was a really good like swing trade, so nothing long term. But we bought it at $32 and we sold it at 38.
Yep.
And right now it's actually basing very bullishly. I actually like it, and I think that copper is a good indication that the economy may be going a little bit steady. I'm not saying growth, but I mean it's not giving up. So I think that if it breaks out $38 again, 38 to 38.50, I think it may have a shot to $42 to $43. Like I said, I'm taking baby steps into the market. I'm not getting greedy into this kind of market.
No, you can't trust anything.
Yeah, it has a strong chance of going a little bit higher. But if it breaks below, then I see a pullback to 35. 35 is also, kind of like that area where it's still into that support. So yeah, it may not be a bad idea. So FCX and also X.
Yeah, I think X. I mean, if they have a infrastructure bill, I mean, this stuff really has got a lot, especially if you went back long term, because on a longer term graph, you can see kind of like Freeport McMoran was at $8 or $10.
Yeah,
that's kind of like what steel looks like to me on a long term graph. Because if you go back many years, when things get cooking, it can really go.
Yes, and the thing is that if it clears out the 26 to $27, it could really go into a short squeeze.
Yeah. So we
I mean, look at the room it has into that prior pivot from oh my goodness. From April.
Yeah. And like I say, if an actual infrastructure, because, again, a lot of these metals, the mines they're not making any new mines, and they obviously have a high cost of trying to extract. So the supplies, in the future, a lot of people are thinking a lot of tangible things are going to be in short supply, like food, because there's no, lots of farms going on, and metals, because there's not a lot of mines going on. And then, of course, oil, because, the supplies have not increased. These guys are returning money to shareholders. They're not looking for more oil.
Yeah. And I also wanted to share something else. Like if we are going to hit a recession, have you guys looked at Campbell's Soup? Like these are the type of stocks. Campbell Soup is actually going into a massive breakout. It has a multi-year resistance multi-year resistance into the 55, very close to $55.
That's CBP. CBP.
Yeah.
CBP. I mean, yeah. And
these are the type of stocks. Yeah, like Campbell Soup, Hormel.
Kraft. What about Kraft? Is Kraft any good? Kraft? KHC?
No. Yeah, Kraft too. Look at the breakout.
Yeah.
See, they're all in a breakout point.
And that's I think Buffett's still got a good size position in that thing.
Yeah.
His patience might pay off at some point here, right?
I think so too.
Dan, you were going to get into a few things that you're kind of looking at. Do you want to either share your screen or tell David what charts you want to look at?
We were looking at, let's take a look at MP, David, if you don't mind. Just maybe, like a year range, daily candles.
Oh, yeah.
So, I mean, this is one that's been pretty interesting. I've been watching this one for a while. We've had a couple of what we call red knockout symbols two of them over the past year, where back in August, we get this nice little pattern where we get several green candles in a row, just like a mini little red candle as a pullback. And you often see it take off from there. And we don't have that set up now, but having busted through the 50-day moving average and the 20-day moving average, until today anyway, seemingly hanging in there, bouncing above that 20-day moving average. I think that we could get a little bit of follow through up to the upside. I think we're going to have to see what happens by the close of business today. And, you know, actually we're looking at, Anka is looking at FCX. If you don't mind, let's take a quick little look-see back at that one. Because I'm kind of agreeing with what she's saying, and adding my own 2 cents that if we get the bounce off the 200-day moving average here, and, you know, like that's a pivot point. If you go back for a year, we've seen some coagulation going on at this like $35-ish level. And, you know, the question becomes how to play it. You know, clearly we can just go in and buy the stock. But, you know, like this is one of these, like there's a lot of weird stuff in the market right now that's very different than we've seen over the past few months.
Right.
Yeah. Like,
Yeah.
like Anka, you just gave like some good examples of stocks that are kind of making runs to the upside on this down day, right?
Yeah, it's still, I don't trust this rally.
Yeah.
Yeah.
But and so that brings me to a good point. Like, how would we play this FCX?
Exactly.
And like the historical volatility is about 63, but the options, like you can buy in FCX, let's look at it. You can buy like some 18-day calls for about a 52 volatility. So, you know, for those of you who aren't like, you know, real into the nitty gritty of option pricing and volatility and all that, basically what that means in lay terms is, you know, you can buy calls which are limited risk and actually get them for value, for cheaper than you should be getting them, which just makes the time decay less, just makes what you pay less, your risk less, and your reward even more leverage. So I like calls in FCX, you know, carefully, because I don't trust the rally either very much, but you know, if you're going to play it, that's a good way.
Are you thinking the energy shares like MRO or Suncor, SU, or Halliburton, Schlumberger? Are they just pulling back, or is it game, set, match a little bit here? What do you think?
Oh man, you know, these have been so strong for like a year. I don't know.
We've lost 20% of the value of the underlying crude, but these people, I guess, you know, are very profitable now because when that crude got whacked in 2020, I guess maybe they got lean, mean, and now they can handle lower prices, I guess. I don't know.
Yeah, I mean, that's a possibility. I haven't really dug into the financials of some of these, but yeah, you know, it's tough. This is another one where maybe, I mean, just looking at Marathon here, the implied volatility being reasonably fairly priced, to be honest. I hadn't really looked at it before this, to tell you the truth, but this could be an interesting little straddle play.
Yeah.
You
Because if
know,
it breaks under 30 substantially, it's got a good $4 on the downside. And then if it got above 32, because it blows out the high point, maybe.
yeah, I mean, you can buy the at the money 30. So the December 16th 30 strike straddle for like $2.70. And, you know, just looking at that in very simple textbook analysis of a straddle, like our break even becomes 32.70 over 18 days. So, you know, your question, is this you know, just a pullback, and can we run higher? Well, that would be running higher. Or is it a break in the action? And so $2.70 lower than that puts us at what, 27.20, which, you know, I mean, if we break through the 50-day moving average, we could see that follow through pretty easily.
Speaking of straddles, I was going to throw a couple of stocks up there. Do you like to look at a straddle after something has made a major move? Like let's put up Macy's and Ross stores as examples. M is Macy and Ross stores OS. So, the retail sector has gone a little nuts here, right? And at this area up here, wouldn't a straddle be something you might consider? Because either 24 is going to go back to 20 or 24 could just keep going.
Yeah, I love looking at straddles. They're tricky, they're tricky to trade. So like you always have to look at how much can I pay for the straddle versus how far can this thing move, right?
Yeah.
And so let's take a look. And I'm using 18-day straddles arbitrarily. I always like to go at least 15 days.
Yeah. And, in the month of December, you're going to have a jobs report, and you got another jobs report Friday, and you're going to have the Fed decision, and you're going to have the PCE, the personal consumption coming out. So there's going to be a lot hitting the fan, not to mention about will this China situation accelerate or not. So, the next, 3 to 4 weeks or something, you've got nothing but stuff hitting the fan, right? And
yeah,
stuff hitting the fan should indicate volatility maybe, right?
Exactly right. And the chance for the proverbial Santa Claus rally, and the Grinch version of that too. But in Macy's you can buy an 18-day straddle for about $2.25. So, I mean, geez, like let's see, the range for today. Well, the range for today is pretty tight, but I mean, $2.25 doesn't put us really all that far away from where we are. I mean, we're $2.25 lower 5 trading sessions ago.
ROST might be a better opportunity because it has more volatility. And of course, when you're buying straddles, your bet is volatility. So let's look at ROST, and you can see there's gaps there. It's up 50% in a month. And, this thing better keep getting good news to give it more gasoline, or that's an engine that could go into stall maybe, huh?
Yeah. So this one, so we can buy a straddle there for $7.30. So we're looking at basically, could we close the gap in 18 days? And the answer is yes, right?
If you went a month, does it go from 7 to 9, or does it go to 7 to 11? Because a lot of people never price out just a little bit more time, because sometimes a little bit more time is not that much more money.
Yeah, valid point. So if we go to 32 days, we actually do get what us option traders would call a lower volatility level, which basically just translates into a lower relative price. Like longer term straddles always cost more, but these costs, let's say less more than they should. The strikes start to get a little, they get $5 apart. So we might be looking at like a strangle or something here.
Yeah.
So $6.70. I mean, going out a full month. $6.70. Oh yeah, going out a full month. So either $6.70 above 20 or $6.70 below 115. Moral to the story is, it's really not a bad idea to go a little bit further out, because holy moly, 32 days from now.
And based on that RSI and where this price is and the gap, you might even favor the put side, meaning raise your strike on the put and raise your strike on the call, because the call you're really only buying more or less as insurance.
Yeah, exactly right. I mean, the puts, you can get a nice underpriced put with a massively overpriced RSI with a big gap to fill. The only thing that scares me a little bit about that, though, is just that there's no resistance for the past year. We have to go back to, I guess really just over a year ago, to tell you the truth.
It certainly had a good dip in April when we hit that high point on RSI. Huh?
Let's see here, April. Oh yeah. Look at that. I mean, holy moly.
And then in August, it had a decent dip of about $10. But with this kind of an up move, if they change the music, there's got to be a little bit of vulnerability on the downside if they could break it. Looks like 115 would be the start of something, maybe.
Yeah, and you know, we can definitely see some beta too if what we were talking about earlier in the show happens and the market just sells off.
Yeah, because this thing obviously would probably be in there with that. Anka, do you have a few stocks that I know you have some stocks you're watching? Why don't we share some of those?
Of course. Okay,
Let's share.
So
It's remember we had Friendsgiving. I don't know, what do you call it? What follows Friendsgiving? Acquaintances sharing. I don't know.
Traders giving.
Traders giving. Okay.
Oh, anyway, so I was mentioning earlier, this food theme with Hormel that is going to report this week. I think they're going to be reporting on Wednesday, but it's very interesting the way it's setting up. We talked about it and we shared the chart already. Campbell's Soup as well, which is, kind of like opening the door for higher prices over that 53, 54. Also, General Mills, GIS, as well. That's a watch for a pullback area. These are all very good contenders because some of these names are already trading into the highs of the year, or getting very close to the high of the year, or trading above the high of the year. So these have been consistently positive throughout the whole entire year. I think these are going to be very good contenders for December, because December is a little bit different. We know that stocks that have been beat up through the whole entire 2022 are going to continue to sell. So bottom picking is not going to be a good idea going into December. We could do that in January, but in December, let's focus more on these high flying stocks, because Dan mentioned something, the Santa Claus rally and window dressing. So we have that whole thing going on into the end of December. And I think we have to bank on that and just focus on stocks that have been running. So this one, GIS, very strong, as you can see it right there. Any kind of pullback, I think it's buyable. It's a little bit extended. If you guys are doing options, then you don't have to wait for pullback. But for me, as the swing trader, trading common, I need a pullback for that. And to some of the list, these consumer goods, like Kellogg's, like Coca-Cola, Pepsi, Altria. These are all, like, if you want some symbols, CAG, for example, that would be the first one. And this is Conagra Foods. This is setting up actually CAG. That's it. Okay, this is actually, again, super strong. So you can see that they're pretty much into the same pattern. So it's like carbon copy, right?
It's all food, right? All food.
Yeah.
I'll tell you right now, just a quick thing is that on General Mills, a cereal like Total, I remember before all the nonsense, it used to go for like $5, and now it went up to like $8. And their idea of a sale, it's at like $7.80. So, I mean, these guys are not cutting prices on food.
No.
And obviously they seem to trend. I'm just looking at a 1 month graph that I use with a 12 SMA. Gave you a nice buy signal at $78. You're still in there. It's at 83. And only if it got under like 82.50 would you maybe get a bend in this thing. So that's a pretty, swing trader, 77 to 83 and $6 in your pocket in a week or two. Nothing wrong with that, right?
Yeah, so I'm thinking like, let's, kind of capitalize on this little theme, because I think everybody's so focused on the tech, like all the chatter on social media and on TV. It's all about tech.
Well, people have made money in the past on tech, but they can't. They're having a hard time understanding that the music has changed.
Yeah, exactly.
They're dancing to a wrong song now.
Exactly. So CAG looks very strong. Looks like it wants to go higher. Kellogg's, K is the ticker symbol. K is also very strong, and it still has room to $76 or more into those highs. And again, see, it's ranging, but it's also going higher. Coca-Cola, KO. Coca-Cola and Pepsi, again, very strong. Look at it, continuing higher, doesn't have a worry in the world. I know 64 to 66 bucks is a lot of resistance. Breaks above that, clear sky above.
Yeah.
Also MO.
Yeah.
Yeah. Altria. Here we go. Yeah. MO is consolidating. Look at that little tiny consolidation that it has right there on this chart, on this daily chart. Still has room into the 200 simple moving average into the 40 bucks. And if it's going to digest the 40 bucks, it's going to punch higher. I like the double bottom low that it has into the $40 area. I like the higher low just into the $43 area. And I think that we're trying to set a little bit of a trend here, even though the moving average is not following price, but it's kind of like shifting a little bit higher. You know what else I like? I like PPC, which is
Pilgrim's Pride.
Pilgrim Pride. Yeah, yeah. Okay, so chicken, pock.
Yeah, yeah.
All right, look at these little chickens right here. If the price breaks above this 200 SMA,
Right.
boom, it can go higher, 28, 30 bucks. I mean, these
And
are
I'm
really
I'm sure you love the orderly fashion, huh? In other words, I mean, this thing is the poster child of trending.
Yes.
I mean, look,
Yes.
it goes from 32 down to 22. I don't think it violated the blue line hardly at all. It's gone from 22 up to 26. It's just when it gets going in the direction, it tends to do the old body in motion till it tends to stay in motion, right?
Yeah, exactly. And you know what else is higher? Smuckers, SJM. So it's all this food that is going higher.
Sounds
Look
like
at
inflation's
it
going to be a lot higher than people think. Sounds like those rates are
Yeah.
going to go higher than people think. And I think the
Exactly.
market's really ready for all that, is it?
I think so too. I
Yeah.
think so too. And I
Was-
think that this is a good theme to watch. You know, watch for setups, you know, watch for, you know, the specifics that you're watching for every single trade, whether you're watching for a pullback. Also zoom on the time frame. Very important that you're trading, whether you're a swing trader, focus
Yeah.
on the daily, weekly. If you're a day trader, you know, just focus on smaller time frames. But these are really good themes. And I think the other thing is that you and Dan were discussing already ROST. That's another theme. That's the holiday shopping, I call it, theme with the ROST with TJ Maxx,
Oh,
with
yeah.
Costco.
Yeah. They want the cheap
Yeah.
stuff. They want the cheap
With
stuff.
Best Buy, Dick's, Macy's, like
Yeah.
all of these stocks that are,
But
just
is there a risk? Is there a risk that they front run all the good news and you are providing liquidity for the smart people who bought 2 weeks ago? That's the question, right?
yeah, I think so.
Yeah, you have to be, you have to be careful. But I mean, I'm looking at Constellation Brands, STZ, and that's, another confirmation of your theme. And the other one is actually
I love that SDC.
Yeah, and then Kroger, who actually is the store where all these stuff's being sold, KR, and they just
Yep.
bought Albertsons. Of course, they got to go in front of Congress and explain why that's not a monopoly. And since I live in a city that those are the only two grocery stores, I'd love to hear what they got to say on that. But at any rate,
Yeah, that's going to be super interesting. Kroger, yes, and I'm in Kroger. Disclaimer, I have been in Kroger for some time now, but it reports this week. So that's going to be interesting as well.
they
Here,
report in front of Congress.
I found a food-focused ETF, PBJ.
Yeah.
Oh, okay. You know what, David? I didn't know about this.
Yeah.
The old,
Yeah, I didn't know about it either. You were talking about it, so I Googled.
Oh my gosh, I love it. And I love the chart as
food
well.
ETFs. Yeah, there's let me see. G, this is another one. Oh wait. This keyboard's having problems. Here's another food focused one.
Yeah, exactly. Peanut butter and jelly.
Yeah, it's going.
Um,
Hey, I was just wondering, Dan, do you want to show a couple of strategies that you're kind of keen on before we run out of time, so people get a little bit of a taste? Because we get a pretty good idea of what Anka's looking at. How about yourself? Do you have any strategy you want to discuss a little bit?
Yeah, there's a couple of things that are hitting my credit spread scanner that are interesting. You mind if I share my screen up here?
Oh, please do.
All right. Let me throw that up here.
We always do better when we can see a visual rather than use our imagination.
Yeah. There's a couple of spreads in particular that I'm finding interesting here. First of all, here in Las Vegas Sands, LVS. What popped up here is the December 2nd 45-47 call credit spread, which basically means as long as Las Vegas Sands stays below 45 for the next week, the trade wins and does pretty well. So let's kind of analyze that just a little bit. So if we go to LVS and we look at a chart, so this is a years long chart. Remember, the stock would have to stay below 45 for this to be a winner. We had earnings and had a little bit of a climb through there. A little extended, but I guess RSI doesn't necessarily show overextended. But we do have that resistance here. We bounced off it. This has been sort of a pivot point in the past, and the options are priced, fairly expensive with, I keep talking about historical volatility and implied volatility. Basically historical volatility is theoretically where the options should be priced, but they end up being priced a little bit higher here. If we go into the options, you can sell about a 50.5 volatility. I'm actually currently working in order here to sell just a little bit different. I want to grab myself an extra 50 cents of wiggle room just to be a little bit more conservative with it. If I get it, great. If not, it's fine too. And then
Discipline. You need your discipline, right?
Yeah, exactly. Right. There's no chasing this stuff, And then GH is an interesting one as well. It's a little tricky because the options are wide, but it's a similar story there. But this is the regular December expiration. So this brings us out about, almost 4 weeks. But this says as long as GH stays below 60, the trade's a winner. And so if we pull up that chart real quick and just sort of, I like to make this a little bit, have it fit a little bit better there. So yeah, as long as we stay below, what did I say, 60, and we've got beautiful resistance there. The options are actually massively overpriced. There's been a little bit of back and forth news on that one, so nothing decisively bullish or decisively bearish. If anything, a little bit of both. And and we've got that 200-day moving average. Not much of a relative strength scenario going on here. So that's another one that I kind of like, which showed up really, really nicely on our scanner that I'm going to take just a little bit of a closer look at as soon as we're off the call here, and maybe throw one of those on as well.
Okay. All right, we're coming to the top. Are you done? You're done, right, Dan?
Yeah.
Because you're gonna now you're gonna tell people exactly how to get a hold of you, so you can get into the water deeper on all this stuff. Because in this format, we both know this is not going to be exhaustive as far as trying to explain how these things work and exactly how you help people with these things. So give us an idea again how to get a hold of you, and if you have any special offers, this is a good time to extend them.
Yeah, of course. Your best bet is to just simply go to markettaker.com. That's market as in stock market, taker as in take what's rightfully yours, 2 T's in a row, markettaker.com. And your best bet is to just simply click join free, and that'll get you a whole bunch of great resources. Our newsletter, it'll tell you when we're having webinars. In fact, we're having a webinar on our time spread time spread genius system coming up just tomorrow night, and you'll get an invite to that if you go to markettaker.com and click join free.
Okay, perfect. Anka, again, you have a lot of different services that you provide. A little clue on how to get a hold of you and any special offers you have and things like that.
All right, so you can reach us, guys, on tradeoutloud.com. You're going to have a pop-up window that when you go to our website, you can put your email in there. And whenever we have a webinar, and we're preparing a really cool webinar for next week, which is going to be a preparation for 2023 and some strategies that we're going to be revealing that are we think going to be appropriate for 2023. So get on that list and stay tuned. You know, we're just trying to rock and roll this market.
Exactly. Okay, great to have you guys with us. As far as optionprofessor.com, just go to the website and you can get details on how to hedge your portfolio against market declines. And when the VIX is at 21 and we can't get through 40, 25 on the S&P, might not be a bad time to dust off the umbrella. And also how to protect yourself against upside surprises, which since October, obviously, we've seen a lot of that too. So optionprofessor.com, and we'll give you our 2023 view on a lot of these markets as well. Okay, thanks a lot, you guys, for being here, and we'll be talking again soon, I'm sure. I'm going to send it back over to David.
All right, great episode. We covered a lot of info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to TimingResearch.com and you can get access to today's episode as soon as I can get it posted, as well as any of the past presentations and events and shows. So I just want to thank my guests again for today, Dan Passarelli of MarketTaker.com and Anka Metcalf of TradeOutloud.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you so
Thanks,
much,
David.
David. Thanks, everybody.